Okay, put versus stop loss. So buying a protective put against the underlying um, basically is similar to placing a stop loss order on the stock. And we're going to look at the pros and cons of both of those trades. And not that I'm allowed to make any kind of recommendation. I will just say um, I am partial to buying a put rather than putting in a stop loss. Sorry, throat getting a little dry. Okay, so buying a put has advantages and disadvantages, right? You your protection is limited to the life of that option. Um, Whereas you can put in a stop loss for the life of your stock if you keep putting a stop loss in. A protected put is going to require premium paid for that put. A stop loss order does not have premium. You will have to pay for, you know, um, commission or fees for the execution, but you do that as well with buying a put. Um, you have to select for both of them what price you want to get out of your long stock position. So that's the similarities. In the stop loss, you're going to put in a value, and then predicted put, you're going to have to buy a put based on that value. Now, part of the pros of buying protective put is control. So when you buy a protective put, you pretty much control the outcome of that, right? That control comes from having the right to exercise your option. Now, if I put in a put and it's the 95 strike put and the stock goes, let's say, to 94 and 3/4, I can actually decide not to exercise my put. Or I could decide to sell my put out, right? Maybe I make a little profit on selling the put, but I have control over those. With a stop loss order, there are things that are out of your control. Now, there's different kinds of stop loss orders. So you can put in a stop loss limit order. So at 95, what happens is that if when it's triggered, that order, your order, that stop loss order actually becomes a sell at 95. And I'm going to talk about that a little bit more in 1 second. You can have a stop loss at the market.